Guys, welcome to another video. This is Capital Matchmaking episode 4, and thank you for hanging on. I know it's a extensive course and I'm giving you information, but this should be helping you when it comes to going out there and raising your own capital, even if you're considering hiring me and helping you achieve those financial targets. So today's episode, we're going to focus on market feasibility and why this is so important. Now, a lot of people go into business and of course they have a great idea and they pursue that idea with a team, with a structure and a model that they feel they're going to generate revenue. And of course, then now they want to attract capital. Now, one of the biggest things you need to understand when in terms of market feasibility is what is your total addressable market? Now, we call it TAM. Now, a lot of companies who are investing in early stage companies or growth companies, what they look at is that total addressable market has to be in the billions of dollars. So I'll give you an example. McDonald's, burgers, and all that kind of stuff, billions of dollars, because everybody in the world is going to eat burgers. It's a cheap product, and of course, they can go after and distribute that at a very, very affordable cost. Now, that's a unique circumstance. McDonald's made a brand of itself, and of course, it's on a level where people already accept that this has become a norm. It's a brand, right? Another one, you can look at is, for example, Uber. It's got a total addressable market. It got a lot of capital at the very beginning when it started addressing that particular sector of the market in terms of taxi, in terms of sharing of the car and making revenue out of that. Another one was Airbnb. That's another model. So these are the type of structures and models that have a total addressable market of $1 billion or more. And in certain situations, one of the things that you understand is when investors in the capital markets, for example, if they're venture capitalists, seed investors, or even early stage investors, one of the biggest things that they end up doing is some of them they do competitive pricing. So what I mean by that is when they put money out there, sometimes what we call this is a spray and pray method. So they spray money into 10 different companies, and out of the 10, maybe let's say 8 would fail, and two out of the two that's left, one would be mediocre and one would be extremely well that it would even cover the losses of the 8 others that didn't do so well and go up and beyond, right? So now this can be a good strategy for a lot because of course they know that this is the strategy that works, this is the structure that works, but unfortunately in the coming years and the previous couple of years, because of that strategy, because of the significant loss, now it's becoming more and more competitive. So now the guideline of capital raising, and we're talking 2018 if you're watching this video, of course, and going beyond, is you want to always focus on the investment strategy that would make sense with you investing in one time, even if it takes a little bit longer. Focusing on that investment particularly and growing it out and even adding resources. So that's an investor's perspective, right? So for example, myself, if I see a real estate team and I have $100,000 I want to write a check to, and I know that they can actually go out there and flip a property, and I put my money with like 3 other investors, my associates, and we get that flip done in a couple of months, and we generate like 100% return on our money or even 50% return on our money, and we know that that team is stable and solid and they have a good track record. That's a criteria that we're willing to work with because these are the guidelines that we follow, right? So when it comes to market feasibility, right, one of the biggest things you want to consider is the idea of, okay, well, what's already out in the market right now? Does my product or service, tailor around a certain need that I'm answering or a problem that I'm solving in a very big way? And is the problem that I'm solving in a very big way is something that the market wants, right? Is it something that I know my customers would love? I know for sure that the investors will see the value in it, as well as, what other things I can do in terms of that particular niche that I have to add other additional resources and platforms or even services or products that would help enhance whatever it is that I'm trying to already address. But in order to get there, right, in order to get to that phase, I need to make sure that this particular marketing strategy is going to be an acceptable process, right? It's going to be acceptable not only to investors, but the actual market itself, that they're actually going to be, buying my product or service, that they're actually going to be, utilizing whatever it is that I have out there. So one of the best ways to actually analyze whether or not, you have a good competitive market and your marketing feasibility is solid is to look at, for example, some of the things that you already have and whatever product or service that you have, and go on the internet and do some research. Now, I don't mean regular research like, hey, is this product good? I'm talking about looking at customer reviews, looking at, white paper reports around that niche, looking at, taking interviews with specific customers that are probably your competitors' customers and asking them, hey, look, what are some of the challenges that you've had with this product or service? What are some of the issues that you've had? And document that, and document even if you have to videotape it or even record the conference call with their permission, of course, and do these type of things, because that's market feasibility, and it's really going on a very, very large scale. You have to take a lot of numbers, you have to do a lot of calls, maybe a lot of interviews, and create these research papers because they have to support, right, the product or service or your business and the model of your business in a very, very thoughtful way. So that is why market feasibility is a very strong component to capital matchmaking, to going out there and fetching investors the right way. And you have to demonstrate based on your own ability that you know how to do research. And like I said, the best way to start market feasibility, to understand it and to study it and to demonstrate it, is by taking interviews, is by demonstrating that, look, these customers, based on like 100 customer interviews, out of 189 of them said that this product or service was, not so good, and because of the following reasons. And then of course you get deeper and deeper and deeper, and you say, well, based on that, we've solved it, and this is what we're doing. And of course, we already have like a competitive advantage, and we can go back to these type of customers to do testing or whatever it is, right? And then of course you go ahead and market your product or service based on their market feasibility. So that's one very important component to capital matchmaking. And I hope that this video was helpful, that you understand what market feasibility is. I hope that you know now certain procedures and protocols that you can personally take when it comes to studying whether or not your product or service is going to be standing out in the marketplace, or if it's going to be worth it. Again, this is your guide and mentor, Ali Rafter. I'll see you in the next video.